investment banking, venture capital, growth equity, and private equity. How are all these fields different? If you want to know the answer, stick around. Hello everyone and welcome to a new video from Careers Talks, where I chat with professionals in the tech, finance and consulting industries about their daily job responsibilities, their career paths and how they manage to land their jobs. In this video I chat with Fatih. Fatih did a degree in economics and finance at the New York University of Abu Dhabi, and then he managed to land a graduate job in investment banking at HSBC in London. He worked there for around a year and a half, and then he shifted to the project financing space. He now works as a growth equity advisor to help startups raise funds and equity from private equity firms. In this video, Fatih will give us a brief and concise explanation of how investment banking differs from fields like venture capital, private equity, and growth equity. I hope you like this video. Don't forget to like, share and subscribe. Thank you for watching. So now you work in private equity. How is that different from investment banking? Why did you make that choice? Like, walk me a bit through these two different industries, let's say.
Okay, I'll tell you about banking first.
Yeah,
and then
let's start with the definitions and then, yes, that would be good.
What an investment bank does, essentially, is to advise companies, big companies, on their capital needs.
Mm-hmm.
By capital needs, I mean you have M&A, which is mergers and acquisitions, when a company wants to buy another company, for example. You have debt. When you want to raise debt, you go to an investment bank to help you raise debt in the debt markets. When you want to raise equity, same. A company wants to do like an IPO, a public offering, or even just raise more equity in the public markets, you go to a bank for help. So it is essentially the one-stop shop for large companies to go for all their capital needs. As an investment banker, it depends on which team you join.
Yeah.
But let's keep it to these three things. Equity capital markets, debt capital markets, and mergers and acquisitions for now. I did M&A.
Okay.
I did mergers and acquisitions. So we essentially, if a company wants to sell or if a company wants to buy, we act as advisors. It doesn't matter which way it's going. We just advise on the whole transaction. Because these are large transactions. They're complex from financial modeling perspective, from a strategic perspective, and also from just a process perspective.
Yeah, definitely.
Yeah. So that's what a bank does, an investment bank. Then private equity, I think there's a scope within private equity that's very helpful to break down. So private equity is, as its name says, private equity. It's the private markets. So it's nothing you're going to see in the stock exchange or anything. It's all private. So you have, in the very, very early stages of the spectrum, early stage venture capital, which is private capital to just very early startups.
Yeah.
Then as the startup grows, you reach a phase where you can call it late stage VC or growth equity, when at this point, startups are raising finance to be able to explode in growth.
Okay.
That is like the turning point in a company to just like exponentially grow. So you have that. And then once the company transitions into a more, let's say, profitable, it becomes profitable, it's fully operational, stuff at later stage, then you can start calling it private equity. As it is.
Okay.
But in technically, private equity covers all this spectrum.
Yeah.
So, yeah.